Well, that's essentially the market for you, down and out 100 points on the Nifty. This is day two after, of course, the union budget yesterday. This is Closing Bell. We are coming to you, as always, from the CNBC-TV18 Motilal studios. I'm Prashant, with me, my colleague Surabhi and Nigel. Guys, hi, good afternoon.
Hi, good afternoon. I realize you two guys are gradually getting towards the weekend. The jackets are off. I'm the one who's like Monday dressing. Need to fix that. But I think there are other things in the market as well which are really grabbing our attention. There's a bit of a decline now.
Well, the weekend's long away, Surabhi. A couple of days still to go, and we've got an exciting last 60 minutes, I would think. Markets are down 100 points down, but not out.
Absolutely, and I think the outperformance of broader markets is very, very stark today. So, yeah, I mean, as we speak, I mean, we've kind of sort of come back above. I mean, the decline is in 2 digits from being down 3 digits. And also numbers are coming through as well, Federal Bank and more. We'll sort of touch upon that. But just a few points here. So 90 points down on the Nifty is what you have. It's an inside day, which basically means that so far, because of course the range yesterday was very high, we're trading within yesterday's sort of bar on the Nifty. The panic low was 24,074, didn't really go anywhere close to it. Just sort of mentioning that, putting that on, and that should hold. I mean, if the market's got to even consolidate and not do very much over the next couple of days, but I mean, that's the number to watch on the downside at this point. Now, broader markets, I think, is the real story because the pressure is only in large caps. And mid caps and small caps are doing very well. Small cap index especially, almost 2% gain on the small cap index. So it's a very pronounced outperformance. Mid cap index is up just under 1%. Market breadth is very strongly in the positive territory. So large caps taking a bit of a backseat, but broader markets doing fine, which means, I mean, in terms of regular portfolios, it should not be that bad a day, even if we actually end somewhere around here with a third of a percent cut or a 0.5% cut on the Nifty. Surabhi.
Yes, absolutely. I think mid caps are the bright spot because otherwise large cap screen, particularly banks for me, it's looking a little difficult and troublesome. The kind of pressure on banking stocks. Now, yesterday you could attribute it to the budget-related volatility. Second day running, there's a lot of follow-through on the way down. Just look at the names. You've got Axis Bank, which will be reporting today about 2% lower, Kotak Mahindra Bank, HDFC Bank, and banks remain a point of concern. You heard that from Chris Wood before the budget as well. A lot of FIs perhaps thinking that this is a structural issue that's playing out and paring down positions. So we'll talk about this. And the Bajaj twins numbers haven't been very kind. Both Bajaj and Finserv are down. So the financial space is definitely weak. But then on the mid-cap screen, I mean, there's plenty of cheer. Look at something like an Avanti Feeds. Remember, yesterday there was a duty relaxation for a lot of the shrimp exporters. That's working very well for that stock. Johnson Hitachi will talk about. There seems to be a deal brewing in the global space that involves Bosch at the global level, which could be beneficial for this company. That's up and about. And ICICI Pru reacting really well to those numbers, 7% higher. So I think mid-caps is where the positivity seems to be.
Well, that's right. On the Nifty Bank, just want to make a quick point. It's going to be playing out the weekly expiry, and today it went down to around 50,700. That 50,500 level is very, very important. I'll tell you why. Because the 50 DMA comes in at around that 50,500. The low of today is 50,700. And 50,500 will mark a 5% correction from the recent peak. So we're already off 4% from the recent peak on the Nifty Bank. And in the last 1 hour or so, it's pulled back close to around 500 points from the low point of the day. Currently at around 51,300. The 50,500 is a very, very important mark. If you plot the 50 DMA, it'll tell you the picture out there. And today is low as well in that vicinity. So keep that on your radar. I think that's going to be the swing factor for the final hour. If it can pull back a little more, it'll help the Nifty recover some of those losses. While if it wants to go ahead and revisit the low of the day, which is 50,700, that's going to be important as well. So keep an eye out. The Nifty Bank has seen a recovery, which is helping the Nifty as well cut its losses from 150 points down. Well, it's now down close to around 50 points or thereabouts. And I think it's getting help from a couple of other names like SBI Life. That's recovered a goodish bit. Big boy Reliance Industries. So the Nifty Bank has recovered, and Reliance Industries, just pull up Reliance Industries, that big boy has moved up, and that explains why the Nifty as well is getting some support. How do you position yourself in the final hour of trade? Mitesh Thakkar joins us. Hi Mitesh, good afternoon. We've seen a bit of a recovery, choppy session, but a recovery from the day's low. Let's focus on the Nifty Bank first since it plays out the weekly expiry. What are the levels you're looking at out there?
Good afternoon, Nigel. So I think, the indices still don't look good to me while there is some strong pullback from lower levels. I think the structure of the Bank Nifty is still worrisome for me. And the Bank Nifty has actually managed to claw back about 400 plus points. Yet, I think I believe that around 51,600, 51,700, 800 zone, I think that 150-point band will see strong supply emerge. And, I think that will be a difficult level for the bank Nifty to get past. With that kind of view, I think the idea is that in case you get closer to about 51,600 levels, would want to explore taking some short position on the banking index, and therefore will avoid trading the Nifty. Though on stock specific basis, I have a buy and a sell. I think the insurance companies are doing very well. So LIC and HDFC Life have just made fresh swing highs. LIC can be bought now with a stop at 1120 for targets of 1200. And HDFC Life, I would recommend a buy here with a stop below 650 for targets of 700.
Okay, a couple of picks there from the insurance space. So let's keep with that theme. Thanks, Mitesh, for that. We'll keep coming back to you. Let's focus on the insurance space. ICICI Pru, that one is surging in trade post its Q1 numbers, while SBI Life as well is also trading in the green ahead of its numbers. Yash joins us to help us with both of them. Yash, tell us first about ICICI Pru, a review of them, and a quick comment. LIC as well, maybe the street is hoping that it could perform as well. Your comment.
Well, Nigel, you spoke about the shopping spree in the market, and seems like the entire crowd is moving towards the life insurance counter at this point of time. ICICI Prudential Life Insurance, particularly, the stocks flying away. Numbers came post-market yesterday, and though there were some hits and some misses, but the market seems to be acknowledging the hits much more than the misses. So as far as our CNBC-TV18 poll is concerned, it was a miss on the total APE and the value of new business, but the new business premium was in line with what the street was expecting out of the company. Retail annualized premium equivalent, which is more margin accretive. There was a strong beat which came as against the CNBC TV18 poll there, and margins, more importantly, came in line with what the street was anticipating. As far as growth year on year is concerned, if you look at that, the numbers are pretty strong. New business premium growing at 24%. Total annualized premium equivalent, though it wasn't slightly below the street estimates, but still growing at 34% on a year-on-year basis. Retail APE growing at 57% on a year-on-year basis. VNB, value of new business growth, came in at 8%, and margins, they came in at about 24.04% versus 30%. Important to point out here that ICICI Prudential has also seen a margin improvement of about 118 basis points on a sequential basis. The stock hasn't done much as compared to a lot of its peers, up about 13% in the last 1 year, 12% in the last 3 months, trading at 1.9 times price to embedded value. So there was valuation support also after the results as the stock opened today, and we can see the stock moving higher. For SBI Life Insurance, the numbers are expected to be just around market closing today or post-market closing. What we are expecting as far as the new business premium is concerned is a growth of 13% on that counter. Total annualized premium equivalent growing at 17%. Retail annualized premium growing at about 21%. Value of new business is expected to grow at about 13%, and margins, they're expected to fall by about 100 basis points or thereabout to come in at about 27.82%. Do remember, the margin figure will be very important again for SBI Life Insurance. Anything about 28% could be a big positive for the stock as we move into tomorrow's trading session. The stock has moved in the last 1 year about 27% higher, 13% higher in the last 3 months. It is, not one of those cheap life insurance stocks. It is a little expensive, trades at 2.2 times FY25 estimated price to embedded value. And also you spoke about LIC. Now the hope in the life insurance sector is that after ICICI Prudential Life did deliver on margins, HDFC Life delivered decent numbers, there could be some positives which could come out of the companies which haven't reported the numbers, like LIC, Max Life, and today SBI Life Insurance.
Okay, all right. Yash, thanks a lot for that. Hope is not a data point, but for the time being, there's nothing wrong in hoping. So explains why LIC is higher. Well, let's get in Prakash Tiban. Hi, Prakash. Good afternoon. Good to see you in. What's your view on these insurance companies? They seem to have come back. They seem to be getting their act together. And the street believes maybe LIC could fire from here. And that's the one with valuation support. Your take?
Good afternoon, Nigel. So I do agree. It's not fair to extrapolate the salience of some of the numbers that have come through. And I can tell you, ICICI Pru has been probably missing something like this, the set of numbers that they've just reported for the last many quarters. So it's heartening to see a fairly well-established name get this. And I think the genesis of this lies in last year's post-budget changes that they made in terms of the product mix. And that's probably started to show numbers. And, I can only tell you that insurance, I look at it from a multi-year, decadal kind of a theme. And from that perspective, I still have been telling people to get into baskets and you buy a little bit of all the 3 or 4 major companies. If you don't want LIC into it, you could skip that, but at least HDFC, SBI, and ICICI Pru. And all of them collectively will actually do an outperformance on the overall market in a way which is very distinct. So, there's a high amount of certainty and probability in those numbers. On LIC, I think there's another thing that you'll probably have some bond yields kicking in terms of, the market gains that they would have also started kind of seeing or would anticipate to be seen. So there is an element which is different, and equities have also run up. They have a significant allocation to that. So LIC is more of a mixed bag from that perspective. But I would recommend you buy into insurance companies on dips, but buy them as a basket.
Okay, so that's on insurance. Prakash, I'm still dealing with the budget hangover. It hasn't gone, so I'm going to pick the same stocks. I mean, look at let's say an Avanti feed, some of these shrimp guys, because the duty on the feed is coming down to, I think, just about 5% shrimp feed. Look at a company like Borosil Renewables, because I think on solar panel glass, now it's all about Make in India. So companies that are manufacturing in India, like perhaps Borosil Renewables, perhaps they stand to benefit. Any further interesting trades? I mean, I'm not saying day trades, but anything that you picked out where there could be a good opportunity looking at the direction of policy?
No, absolutely. See, there are 2 or 3 areas which probably, are worth looking at from a second order, impact. And one of them is this employment creation focus that has been there. The other one is the focus on areas like Bihar. There's a lot of infrastructure spend that's happening out there. And I can tell you, there are companies which specialize in those pockets, whether it's Bihar or whether it's the East, so you'll have that. And you could also look at cement within that. Companies that are focused onto that market. Nigel is sitting right with you, next to you. He'll tell you that, East has a very different dynamics in comparison to the South and the West when it comes to cement. Another company that I identified, and we could speak about this yesterday, was, this whole spend in Bihar is going to eventually percolate down to a lot of retail growth. And there's a company called V2 Retail. I don't know if you've ever spoken about this. So there's V-Mart, of course, which is more pan-India, V2 Retail, which is a bit more centered in those areas. And I was surprised V2 Retail is also at a 5% upper circuit today. So, V2 Retail has very small, presence in tier 2, tier 3 towns. Now, these are pockets which will see a bit of a re-rating. So the way you had the Avanti fees, Borosil Renewable re-rating underway, I think there'll be a lot that will happen. And the other area is shipbuilding, though we've not heard of very specific plans yet. But the focus that it warranted in terms of a mention means that you'll probably see a lot of shipbreaking, shipbuilding, ancillaries to be kind of also looked at. So there's lots that's there, but we're not in a hurry because the market is at valuations which are absolutely there's no margin of error. So I would look at these names from a more secular long-term perspective at slightly more comfortable
Prakash, got that. Prakash, I missed the first talk. Before V2, you said shipbuilders, V2, and which was the first one?
No, I was talking about infra names. So
infra
the likes
names.
of PNC, the PNC infra, the NG infra, who specialize in doing stuff in these pockets, whether it's road construction, bridges. There's a lot of construction activity that she's spoken about, right? So you could look at those kind of names also to benefit.
Okay, all right, got it. So those are some perhaps budget-related plays that could have a longer runway, not just a day or 2 trades. Could be, bigger business opportunity over there. I think we have Abhishek joining in. Do we have Abhishek? Let's see if we can go across. Because banks are in focus, so much pressure right now. All eyes are going to be on Axis Bank. Let's see if it can deliver some sort of a uplifting result today. Abhishek, what are the expectations?
The expectation is of a weak earning for Axis Bank. So the key things to watch will be that sequentially analysts are expecting deposit to outpace the loan growth, which means that credit deposit ratio can decline. So loan growth is expected anywhere between 13% to 15% YOY and about 1 to 2% on a sequential basis. Now loan growth will be driven by high yielding portfolio, largely that has been seen with Axis Bank over the last few quarters. Net interest margin can come under pressure. So Morgan Stanley is estimating a 8 basis point decline YOY and 4 basis point decline in net interest margin on a sequential basis. So slippage is expected to rise quarter on quarter, which is largely seasonal in nature. So last quarter it was around 3,400 odd crores. So Phillip Capital is estimating slippages of 4,000 crore in this quarter. However, asset quality can remain stable on a sequential basis. The near-term growth outlook and the net interest margin progression, what the management guides on these two fronts will be seen closely. Our polls suggest NII growth of 11.7% YOY, while PAT is expected to decline 0.4% YOY and about 19% on a sequential basis. Back to you.
Okay, all right, got it. Abhishek, thanks very much. That's Axis Bank in focus. The other big stock to watch out for is going to be L&T. Numbers coming up soon. Vivek is here with the preview. Vivek.
Well, capital goods major L&T will be declaring its results, just post-market hours. This time around, expected to be a slightly subdued quarter. Revenues higher by almost 8.5%. But remember, Q1, you saw elections, you also saw extreme summer, and the company has actually mentioned that they were grappling with labor shortage issues as well. EBITDA is seen higher by close to 12.5%, so close to the 5,480 crore mark. The consolidated EBITDA margin is seen at around 10.5%, and profitability is seen higher by close to 15.3%. Now, when you're talking about the key thing to watch out for, it will be the order inflow uptick. So far, the company has, reported a little less than 10,000 crore of order inflow. So analysts are worried that there could be a downside risk as far as the order inflow guidance of 10% that the company has given as far as FY25 is concerned. Now, this particular quarter, the overseas order book is something that will be important to watch. Remember, the company has received orders both in hydrocarbon as well as non-hydrocarbon segment from the Middle East. And if there is improved traction there, that is something that the markets will see as a positive. Now, first up, let us have a look at what is it that the company has given in terms of guidance for FY25. Number one, order inflow seen at 10%, top line guidance seen at 15%. Core margin guidance, which was underwhelming, is seen at 8.25%. So that is something that the market will very keenly watch out for, the core margin guidance.
Vivek, thank you very much for that. Prakash, just wanted your thoughts on BSE. I mean, actually, not just BSE. The stock will come up on your screen. It's up 8.5%. It's a sharp move. And of course, I mean, it's sold off from the highs of 3,300 to about, I think the low was closer to 2,100. So it was a sharp cut. But today it's up sharply. Now, there is widespread expectation, Prakash, that over the next couple of days, I mean, the budget's done what it has, but we'll also hear from SEBI in terms of the capital market. I mean, lot size changes on the F&O side, one expiry per week per exchange, etc. Those kind of things. This is, of course, I'm sort of talking about what's been reported and what was under consideration. What are implications for a player like BSE and maybe even brokers for that matter? Angel was up yesterday. I'm not sure what it's doing today, and a few others.
So, Prashant, the only way you can surmise this in terms of the reflection on the BSE screen is you'll probably have a little bit of business on the F&O side, especially option side, come off from the NSE. And some of that money would probably find its way into, BSE on especially the smaller stocks that are listed. There is anticipation that some of this, money that is in the short-term trades could probably, and there's a huge appetite for investment traders on that side. So some of it could probably start sufficing. This area could start sufficing for the absence of those derivative, opportunities. But it's still too early. But my sense is look at what the budget has done for MSMEs at large. It has made that entire platform, entire segment very robust, or at least it has, initiated some sort of a thing to make them financially very strong. And if that were to happen, the overall culture of going and getting yourself listed through whether it's the SME merge or, on the BSE, whichever way, that would probably improve. And there's going to be, a higher impetus to financialization which will also help the BSE, MF Star, this thing, platform. So I think there's a lot in terms of second order impacts, but all of this is long range. There's nothing which I have come across which is immediate. But because of valuation comfort, as you rightly said, it's available at almost like 30% off from where it used to be. You'll probably be able to buy into it. So that's the rationale. But beyond that, I haven't been able to make out anything which has a direct correlation to the announcements.
Nigel, you were talking about how the expiry, right?
Yeah.
So if they do that one expiry per week per exchange, I mean, I think that is still, I think, manageable. That's also going to have an impact. But if they, I mean, the bigger thing is which is not under consideration, at least from what we also reported, take over weekly contracts. I mean, that is going to be huge. I mean, if something like that happens.
And that'll be a little puzzling as well, because these weekly contracts were introduced to get more participation coming in there. And now you do away with that. So that'll be a little bit puzzling. I spoke to a couple of market men yesterday, and they said, what direction are they sending out? You introduce this first to get participation. Now, when you get plenty of it, you're saying we won't do it any longer. So it's a bit of a tricky one.
They wanted, but they got
they got too much.
All right. Well, we'll take a quick commercial break here. Vijay Kedia is going to be with us on the other side. He's someone, of course, who tracks markets closely. Long-term investor, needs no introduction really. So that comes up in just a minute and a half. The Finance Minister, Nirmala Sitharaman, has hiked short-term capital gains tax on certain financial assets to 20%, and long-term capital gains tax was hiked to 12.5% on financial and non-financial assets. Finance Secretary, Mr. Somanathan, clarified that the idea was to bring equity in capital gains taxation. He's also ruled out further hike in taxation, at least for now. To discuss this further, I'm now joined by S. Naren, Executive Director and Chief Investment Officer at ICICI Prudential AMC. Naren, great to have you with us here. I want to just start with that bit first, which is, what do you make of the clarification, almost a promise that they will keep the rate at 12.5%, at least for the foreseeable future? Welcome back. We have private investor Vijay Kedia, who is now joining us with his perspective on the markets, the budget. Mr. Kedia, great to have you with us here. Good to see you again. The budget hump is behind us now, and I think we can, the sigh, there's relief that it is behind. I'm not sure what it does. What does it do, according to you, Mr. Kedia, for markets? Does it do anything at all? Has your view changed, perspective changed in any which way?
No, nothing, Prashant. Nothing has changed. I think budget has come, budget has gone. And a lot of people, mainly into stock market, is talking about all these short-term and long-term capital gain tax. In my view, I had thought that it is bound to come, and it is not going to change anything. I will tell you one thing regarding this long-term capital gain tax, because that is now the topic, hot topic. As I always say, you see, Prashant, there is working hours, and there is a happy hour, and there is hangover hour. So whatever happening in this market is a hangover hour. Okay, so it is the best time that you can say your man ka baat. So this is what this FM has been giving us hint for last 2-3 years, that ultimately they will bring all these financial assets in one bracket. So this is the best time to do this.
Is it an indication from them कि अब थोड़ी अति हो गई है कि आप थोड़ा थम जाइए? Or would you read it like? Because now we are also, I was just talking about something more coming from SEBI. That is still pending, but that is on the F&O side. Indications are that something will happen because there is a committee on which has been formed, and we reported on this yesterday. So essentially, authorities are also kind of not taking a view on the market per se, but maybe that things are very, very good. So they'll be able to absorb higher taxation.
So it is not because things are very good. I think because they think that things are very bad. So what we call it good from the liquidity perspective or from the volume perspective may not be good for the health of the market, because all these new people are coming. If you like, SEBI has constantly saying this for last many months, that 90% are traders and they lose money. 99% are traders and they lose money. SEBI doesn't want all this crisis. So that is why they are bringing some therapy so that this crisis can be averted. So of course, I also feel I will agree to this, that now SEBI's something change in some composition or something, whatever it is going to come very soon. But that is good for the market, Prashant. Yeah.
Okay, so that's good for the market. Curbing speculation will be good for the market. So you're on the same side as some of the regulators. Get that, Vijayji. But I want to draw your attention to the other piece, and that for me is perhaps the bigger debate. The general financialization of savings in the country, right? And we saw mention in the economic survey. Rarely before has a government document like the economic survey spoken so extensively about how over-financialization is a threat. It ended really badly in the West and we had the financial crisis, etc. Just your thoughts on that. I mean, the fact is, look at how quickly dips are getting bought. Election result day, dekhiye kya hua. Then yesterday, within a matter of hours, it was all bought. Is there some credibility to that argument that over-financialization, too much of savings going into the stock market is a problem? Do you see that as a problem?
Of course, a blind man can also see that. You see, earlier I must have told on your channel also. Earlier we used to talk about in earlier days, the roti, kapda or makan. Then it switched to roti, kapda, makan or data. Now it is roti, kapda, makan, data or shares. So now the stocks and shares, it has become a cult. And it is not earlier. It is even my peon. I am telling you, he is also investing. What he calls himself an investor. He is also trading into the market. So this has become a cult. So there is no problem in being a cult, and as long as they are educated and they have some experience. If they are coming directly into this market and doing all this satta only, then it is not going to end well. Timing, nobody knows whether it is going to happen today or maybe it will happen after 6 months. But mind it, I am not saying that bull market is over. This bull market is going to last maybe for next 5-6 years more, But the way things are happening, SEBI certainly said SEBI is worried about it. And 2-3 days back also they said that all these fixed deposits and all going into stock market. So that is not stock market coming into a stock market. That doesn't mean that it's coming for investments. That's coming for future and option. So it's a cause of worry.
So Mr. Kide, the point is, my simple question is that money that is coming in, let's say via mutual funds, forget F&O for a minute, mutual fund money coming in, investors really wanting to invest, so much money coming in on a monthly basis. Are you worried about a bubble, too much domestic liquidity? That's my question.
What is too much liquidity? 20,000 crore a month? Is it huge money compared to whatever $4.5 trillion or whatever our market cap is? That's a small sum. Ultimately, I had told this thing to Prashant, I remember, that forget about the 20,000 crore a month. Ultimately, it will come 20,000 crore a week and later on 20,000 crore a day on a daily basis. So there I do not have any dispute. Money coming to mutual fund, I do not have any dispute. Money coming to future and option, that scares me.
Hi, Mr. Kedia. Good afternoon and good to see you. And I like the hangover, the happy hours example. Quite an interesting one over there. And you seem pretty okay. You're saying that some restrictions, some curbs on this trading mentality is called for. So we get that point. Let's get to some sectors, some themes that you like as well, even from these levels. As you mentioned, the bull market is well and truly on. We still have a few years in store. And there will be sectors and themes that will do well. So give us a couple.
No, same as before, because forget about this budget and all. Whatever policy has been laid down by this government, I think those policy will be supported, and that thing will go on. For example, like I like infrastructure story. I think 11 lakh crore, 11.11 lakh crore has been earmarked. What they in the interim budget they have maintained that. And again, we are going to have a budget 6 months later also again. So I think infrastructure should do well. And as I believe that India has the biggest problem India is facing is unemployment. You know, we need 80 lakh new jobs every year. And plus the people who are leaving the old jobs also need replacement. So manufacturing sector can, to some extent.
Mr. Kedia, I think we have lost you. I think, Mr. Kedia, we'll just come back to you and fix that audio. For the time being, I think we'll reconnect with Mr. Kedia. Let's take stock about the markets as we reconnect with Mr. Kedia. The Nifty Bank, that's trying to pull back, and it's pulled back considerably actually from the low point of the day. But I think the Nifty Financial Services Index, which houses some of these insurance companies, that's staging a better, pullback, because you have the insurance companies that are in there and the other ones as well. So that's cut its losses considerably from the low point of the day. SBI Life now at the high point of the day. HDFC Life as well moving higher, and Big Boy Reliance as well has moved up. I think Mr. Kedia is back with us. Yes, sir. Please go ahead. We lost that audio for a bit.
Yeah, okay. So I was saying, the sectors which has been doing well earlier, are where the government is focusing, all those sectors will do well. We cannot imagine in India, we cannot imagine a $10 trillion or $30 trillion economy without infrastructure. So I think infrastructure companies should do well. And as I said, that I always have one worry that India needs 70 lakh, new jobs every year. And plus people who are leaving the job also need a replacement. So manufacturing sector can, to some extent, can take care of that sector, that issue, that problem of unemployment. So manufacturing should do well. And besides all these things like power or maybe solar and tourism, where the government is focusing and has mentioned many times, I think all these things will do well.
I was just looking at what you told us. I think you were with us on the 9th of July, not very far back. And your exact quote was, personally, I think government will tinker with long-term capital gains tax, either rate or tenure. Yeah. So,
both happened.
Both have happened. So, absolutely. And by the way, you talked about infrastructure. One of our viewers have written in and requesting us to please ask you about home infra. I think one of your investments. But I think you've given us a sense of the infra sector. Anything you want to add there?
No. It's difficult to say. Let me tell you, I may sell also my shares maybe tomorrow or after this interview is over. So I am bullish on infrastructure theme. Now you have to select shares. Madhuri ma'am has asked me not to mention a name on TV and all. So CV chairperson, I mean to say, ask me in the sense of money. So I don't want to get into shares and all, but I am bullish on infrastructure stocks. So they should do well, Prashant.
Absolutely. And not asking you to comment on stocks at all. Don't do that. But any other sort of broad themes you want to touch upon where do you see a good runway for growth overall without naming any stocks?
No, you see, earlier, whatever stocks, whatever shares I was bullish on, I am still bullish. The only thing is this, that I find this market is really going through a hangover phase. So I don't want to invest in this market. I am just, you can call me, I am just cheerleader or fence sitter. I am just watching this market. I don't want to invest in this market because of this, the kind of, euphoria happening in this market, mainly in future and option. So I am little conservative.
All right. Vijay, apart from the F&O euphoria, speculation, all these issues, is there anything else that worries you? I'll tell you one piece of debate that's kind of really become center stage since we last spoke, and that is banks. Now, we always thought that banks were the darlings of all foreign investors. Whenever foreigners will come, they'll buy banks. Now, there are questions to that thesis, at least in the near term. So, I don't know, is that a point of concern? Any other concern that you see?
I don't know. I do not have any concern. The biggest concern I have in this market is the retail participation. Again, I'm saying I'm not against them, but they should be educated and they should have some experience. Because I know one thing I would like to share with you. One day I was thinking, there's these traders, actually, these traders are like monkeys, and these investors are like donkeys. So I'm a donkey, so I don't mind buying shares and just stay like a donkey instead of doing all these things. So I'm little worried about this, about whatever happening. So this is what is my take.
मिस्टर केडिया बजट को लेके कुछ गुनगुनाना चाहेंगे?
नहीं, बजट में तो नहीं अभी सब लोग ऐसा बोल रहे हैं, तो मैं उनके लिए बोल देता हूँ कि दिल ऐसा किसी ने मेरा तोड़ा, मानुस बना के छोड़ा. For people, I'm not worried about it, यार. Prashant, let me tell you, yaar, I was reading somewhere 2.2% adult population in India are income taxpayers. 2.2% adult population in India are taxpayers, compared to 80% in France and 50% in USA and 60% in Germany and Britain and all. So we don't want to compare ourselves about all these developed countries and all, but we want to become a developed country. So unless somebody will have to pay tax now. If I can pay taxes and I don't want to pay, you cannot afford, you do not have income to pay taxes, so you don't want to pay. So ultimately, how this country will run? So forget about this budget. I think this budget it's a wonderful budget. It's a very good budget. Whatever they could have done, they did it. And the themes, whatever has been doing good, will keep on doing good.
चलिए वो सुन के आए भरेंगे कुछ लोग, but 2% number is correct, but the issue is the 2% is taxed quite a bit. I think that is the issue. So we got to sort of widen the tax base, etc. as well. But that's another sort of conversation altogether. But thank you very much. Yeah, absolutely, Mr. Kedia, great to have you with us here. Thank you very much for joining us as always. Thank you. Well, IDBI is the next one that we want to focus on. Stocks, I think, up 10%. And this is expectations of its divestment in the near future. This sort of buzz, this expectation has risen because of a specific reason, because of some comments made by one of the secretaries yesterday. But let's put this entire thing into some context. Abhishek is here with details. Abhishek.
Well, Prashant, to begin with, Deepam expects, a divestment of IDBI Bank this year. So, IDBI Bank divestment process is in stage 2 as per them, and RBI not to fit and proper qualification of bidders is awaited. Now, LIC and government is expected to divest about 30% each in the first tranche itself. If you take a look at the shareholding pattern, Government of India holds about 45.5% and LIC about 49.2%. If you take a look at the financial picture, we already have the Q1 FY25 result that have come out for IDBI Bank. Some of the key numbers is that the gross NPA ratio is below the 4% mark at 3.9%, and the net NPA ratio is at 0.23%, which is perhaps the lowest that you are seeing in the banking sector. Now, the capitalization is strong, so capital adequacy ratio is at 22.3%, which is strong if you take a look at the peer comparison. And it's the bank with the highest CASA ratio that is there in this sector right now. About 48.6% is the CASA ratio. And if you take a look at the valuation picture, the valuation is priced to book value of 2.4 times Q1 FY25 book value. Let's listen in to Deepam Seki as to what he has to say about the same.
Quick question on IDBI Bank, because that, of course, has been waiting for several years now. We are given to understand that the RBI has come back now with the clearance on fit and proper. Is the next stage set as far as IDBI Bank is concerned?
I think RBI is in an advanced stage of doing it, and I think we will move forward.
They have not actually come back.
They have not come back. Okay, so it's still...
I mean, they're almost there, but then they would let us know, and we will move to due diligence stage and move forward.
So can we expect that to be done in this financial year?
Hope so.
Well, time to slip in a short break. But before we do that, the reason the markets are not able to come up is because the big boy L&T that's going to report its numbers post-market close, that slipped a little bit, and I think it's moved to the low point of the day. So Street a little bit nervous ahead of those numbers. Slip in a short break, come back. We'll continue our focus on markets. We'll also get you, technical calls for tomorrow.
CNBC-TV18 Budget 2024, The Verdict. CNBC-TV18 Budget 2024, The
Welcome back. We're holding steady. IDBI Bank continues to build onto those gains, now up 13%. So that one's flying away. And Polycab, that's another stock that's doing very, very well in the last few minutes. So just pull up the intraday chart out there. That stock has moved to the high point of the day. Indus Stars, there's supposed to be a bit of a rebalance that takes place in the last 30 minutes. Bulk of that, I guess, could have been done earlier as well. So for the time being, the stock is more or less flattish. But that's a stock to track for the last 30 minutes or so. So keep an eye out on that one. Mitesh Thakkar is back with us. Well, Mitesh, tell us, what are the buy or sell calls you have for us with the reverse trade tomorrow?
I think there's some breakout happening on IDBI. I think what's covering the news. That's a buy for the stop at 93 for targets of 105, 106. And it's not a BTST, it's more of, a trading kind of a call. And a BTST on Bata India, it was a buy today morning, but closing with strength, Bata could see further continuation tomorrow. So BTST here with a stop at 1596, 1595 and target of 1620 can be.
Okay, all right, got it. Thanks very much, Mitesh, for that. Well, we have Mayuresh Joshi, Head of Equity Research at William O'Neill, joining in now. Mayuresh, good to have you on. So, do you have a budget pick for us now that the dust has settled and the analysis is, pretty much over?
Afternoon, Surabhi. Yes, I think a couple of ones, in fact. So to that extent, I think related to all the taxation and what the impact might be, I think the next few days might give a clear indication on that. But purely going in terms of what the government initiatives are, Welspun Enterprises is one stock that you are keeping on radar on any sort of a pullback. Obviously, I think the key intent of the government in terms of urban water infrastructure, Nal Se Jal Yojana and wastewater management as well. I think there is a huge outlay out there. And therefore, I think as this gets implemented over the next few quarters, because Welspun Enterprises is a large part of the revenue pie coming in from the water business itself, around 77%, a large portion of which is the EPC business itself, which has a decent amount of margin. The rest of the business obviously is contributed from the EPC of roads. So to a certain extent, I think roads, water, waste management, the key areas and focal areas of the government in terms of capex spends, Welspun Enterprise might be a key beneficiary. They've got a very strong order books, will be in excess of 12,200 odd crores. They have been executing well. In fact, a couple of projects that they have recently won, one in Mumbai as well in terms of water treatment. I think that is going to go a long way. On top of that, I think the oil and gas blocks that they have in terms of partnership with the Adani Group, there is expectation of some element of numbers coming in from the first quarter as the exploration starts happening in a real earnest from FY 25-26. That has come off quite significantly, and therefore expectation of solid earnings growth might very well continue. So Welspun Enterprises, along with a couple of others, I think if you've got time to discuss, we can do that at a later stage.
Hi, Mayuresh. Good afternoon, and got that view on Welspun Enterprises. What about IDBI Bank, the street believes that this time around, hopefully there'll be some push and the divestment will take place. Stock is up 13%, moving on massive volumes. What's the view at 97 rupees?
Afternoon, Nigel. No, I think it's always been a case of expecting something to happen, and it never goes their way. So to that extent, I think I hope this is the year that there is some element of traction in terms of the privatization that we've been all hearing about. Obviously, numbers are still a little bit patchy when it comes to how their asset portfolio is, both in terms of gross NPAs and net NPAs as well. But I think some traction in terms of actionables, if it is undertaken at this juncture, I think that can give a clear picture to the street as well in terms of the timelines in which this will be. Otherwise, I think it'll be disappointing and the stock might just revert back to its mean. We have been a little bit more selective when it comes to the BFSI space, Nigel. So something like a Karur, where the numbers, in our opinion, were very, very good, is something that we continue holding on to our portfolios. And we would be looking out for Axis Bank's numbers. So large part of the expectation in terms of how the advances growth will be, and specifically in terms of how the deposit growth is expected to be, is something that will probably give a clear path. We continue holding this one along with ICICI Bank in our global portfolios.
Okay, all right, got it, Mayuresh. Thanks for that. Just stay on, we'll have some more questions for you. Some more stocks in focus. CG Power has been reacting quite well to the numbers that came out just a while back. We've got Vamakshi. Vamakshi, tell us the fine print.
Well, absolutely. It's a good set coming in from CG Power. We're seeing that the company has reported numbers that were much better than what the street was expecting. In fact, the order book saw an uptick of almost 44%. The order book has now surpassed the 7,000 crore mark and stands at 7,054 crores, out of which Power Systems accounts for 4,603 crores. This is seeing a very good uptick of nearly 60%. So that was it for the order books. But when we look at the numbers, revenue is seeing an uptick of almost 19%. In fact, revenue has come in more or less in line with what the street was expecting, but it is the operational performance for the company that has actually stood out. In fact, when we look at the EBITDA margins, they've managed to improve by almost 52 basis points and have come in nearly 82 basis points higher as compared to the street expectations. Largely, this beat is being driven by their power systems business. We're seeing that the revenue is nearly 3% higher than estimates. EBIT is nearly 28% higher than estimates, and the EBIT margin was nearly 400 basis points higher than estimates for the power systems business. The industrial systems business, on the other hand, which contributes a significant portion of the revenue, in fact, revenue saw an uptick of almost 8%, but the EBIT declined by 9% on a YOY basis, and the margins were nearly 244 basis points lower on a YOY basis. So overall, I would put the results as a good set of numbers, and this good set is largely being driven by the power systems business. But additionally, as you just a while ago, there was a flash going on the bottom of the screen. The company has also announced an acquisition of around 320 crores. So again, that again is pushing the stock higher in the trading session today.
Okay, got it. So lots of news and a good result from CG Power. Thank you, Vamakshi, for that. Let's address one more stock. The one that we're looking at is actually Johnson-controlled Hitachi. Now, the last time I checked it, it was up about 8%. Now it's still up about 6.5%. Now, there is a global M&A development that seems to be in the making. Bosch Group is all set to acquire the residential and light commercial HVAC business from Johnson's controlled Hitachi. Let's just figure out what this all means. We've got Upasana in. Upasana, this is a global transaction as a part of which some of Johnson Hitachi's India business is getting sold as well. Is that right?
Well, that's correct. Johnson controlled Hitachi Air Conditioning India as a stock on my radar. Now, let us understand what has exactly happened in the company. According to the global update, Bosch Group to acquire residential and light commercial HVAC business from JCI Hitachi joint venture. Now, last night there was an update on the exchanges that this divestment will include India's stake as well. The total transaction is valued at $8.1 billion, out of which JCI consideration is of around $6.7 billion. The acquisition is expected to be closed in approximately 12 months from now. Now, what are the key implications on the India business? The India business largely deals with air conditioner for both residential and commercial, with a small revenue coming from high-end refrigerators, which is largely imported by the company. For the last few years, the business has seen limited focus from promoters, which led to India entity seeing a decline in its market share amid new products. The global transaction of Bosch acquiring HVAC business will augur well for the company on the back of two reasons. Firstly, this transaction will complement the existing portfolio of Bosch, and secondly, the improved management focus will also recoup some lost market share and thus instill confidence within the customers. So all in all, that's the reason why this stock is on my radar.
Okay, got it, Topasan. Thank you very much. So two separate developments, CG Power and Johnson's Control Hitachi in focus. Maresh, do you track either of the stocks? Any quick take?
So I think, as Upasana mentioned, I think we'll need to wait in terms of what dynamics are actually coming out in terms of the transaction itself and how is the valuation probably expected to be. Obviously, the numbers for Johnson Hitachi are expected to be a little bit more stable in terms of how the growth dynamics might pan out for the entire industry as a whole. But I'll largely wait out in terms of the transaction details per se.
Okay, all right. Just at the bottom of your screen, Syngene has maintained their FY25 guidance. I guess the street was a little bit nervous on that front, just going by the stock reaction, because the stock from being down close to around 2% has seen a good recovery from the low point of the day, of close to around 2.5% after that piece of news did hit the screen. Mahesh, you want to comment on this one? Syngene now on the verge of moving into the green. I recall it was down close to 2%.
It's a very stable business, Nigel. I think one must understand that when the numbers come in for Syngene, I think it comes in a bulk of quarters, and the remaining quarters probably remain a little bit more muted. But the kind of work that they're probably doing, especially in their specialty business, and expectations in terms of the biosimilars as well, there is expectation in terms of also the normalization of the Malaysian facility that they are operating out of. And therefore, I think you probably need to look at this story over a really long period of time, because I think as they are able to monetize a large part of their niche portfolio and expecting that to start delivering consistently over quarters, I think that is where the game change will be. So I think the guidance that they're probably now giving out, the ticker that you're probably putting out, I think it's a good one. Anybody holding the stock should continue holding this.
All right, we'll take a quick commercial break here, but absolutely no mistake that this is a really good market for mid caps and small caps, and we'll talk about many more of them when we return. Really, big volume-led gains on a really long list of mid and small caps, especially small caps today. More on that in a bit. Take a break. See you on the other side.
Welcome back. Just 5 minutes to go till the close of trade, and the Nifty Bank, we had spotted that one out. Now it's at around 51,500. At the low of the day, it had gone to around 50,700. So the Nifty Bank is making a bit of a pullback. It explains why the Nifty is now down close to only around 30 points. I think the intraday chart of the Nifty will give you a better picture, and pull up the Nifty Bank as well. That should come up for you on the screen. Cutting losses in a big manner. The Nifty Bank, yes, that's the one that we are referring to. It's seen a good recovery, particularly in the last 1 hour or so. Mayuresh is still with us. Mayuresh, what about SRF? We have some flashes that are at the bottom of your screen. Sonal is listening into the con call. What they're mentioning is they've not deferred any kind of the capex plans out there, and they're taking various measures to improve margins going ahead. The stock is not very, very cheap, but your view at around this 3,200 odd rupees?
So I think that would be a positive, Nigel, because they need to carry their capex plan.
Mayuresh, you'll have to unmute yourself. It's 2,300 rupees, beg your pardon.
Yeah. So I think the capex plans on is a good sign. The other element is, out of all the product segments that they work out on, there is anticipation that there will be recovery, both in terms of volumes and pricing as we head into the next few quarters. So the gradual recovery that we've now started seeing in a lot of these quasi-chemical plays as well, you're going to see a earnest recovery probably start coming through in the second half. As that starts taking place, the leverage benefits will start coming on the balance sheet as well. And that will reflect clearly in terms of numbers improving, specifically from an FY26 perspective. So to that extent, yes, anybody holding should hold on. Our belief is that numbers should start improving for SRF in the second half of this financial year.
Okay, by the way, as we're coming down to the close, there's quite a bit of recovery in several stocks, including banks. Bank Nifty has cut its losses. ICICI Bank and many of the others are trying to take a leg up. Just very quickly, Mayuresh, of course, we'll look at Axis's numbers in just a while from now. What is your top large cap banking pick?
So, Surabhi, as I mentioned, ICICI Bank remains our top banking pick when it comes to the large private banks. Our belief is still that the numbers in terms of advances growth should continue in a very decent fashion for ICICI Bank. Obviously, deposit mobilization has been a big issue for the industry as a whole, but that should start normalizing in the second half. Obviously, I think the kind of provisioning that they have done on the balance sheet and the expectations in terms of the risk-weighted assets as a percentage of their overall balance sheet as well, I think it's very well managed at this juncture. And therefore, ICICI Bank among the large private banks, and as I mentioned, Karur Vysya Bank, I think those are a very good set of numbers that the bank has posted within the mid-private banks. I think ICICI and Karur remain our top bank.
And very quickly, from the insurers, today there's such a huge I don't know if it's just a relief rally that there's nothing negative in the budget or something more than that. But from the insurers, life, non-life, any thoughts here?
So Life, SBI Life has always been on top of my list. Numbers expected today, so let's see how the numbers come. But in terms of the overall dynamics, expecting their product mix, specifically the protection part of their business, to grow very, very well. The value of new business margins is going to be critical, but I think that is going to be well maintained going forward as well. A little bit more expensive in terms of price to embedded valuations compared to the rest of the pack. But their cost leadership, specifically in terms of their entire outgo, including commissions, is in higher single digits compared to double digits, rather 19-20% for their peers as well. So continuing liking SBI Life when it comes to the life insurance.
Okay. All right, Mayuresh, thanks a lot for that. Well, time to wind down on the markets then. And there was a good recovery on the Nifty. Par for the course, one would say, if you go home with a cut of only around 40 points, from being down 140 points. The Nifty Bank as well has recovered close to around 700 points from the low point of the day. It goes home with a cut of close to around 330 points. What didn't do well in today's trading session? Bajaj Finserv was under pressure, was down 2%. Britannia as well came in for profit taking, and Tata Consumer as well as HUL. So contrary to expectations, the consumption names of the FMCG pack did come in for profit taking. What did well? HDFC Life, SBI Life, both of them were firing away all cylinders. Tech Mahindra ahead of its numbers as well was up close to around 3%, and BPCL as well was up close to around 3% in trade today.
I'll get to broader markets in just a bit, but just want to highlight some more of these stocks which really rallied hard. If you can have these stocks up, look at IFCI, and just a bunch of names, right? IFCI up sharply, IDBI up over 10%, 11-12% by close. You had MMTC, which went up sharply. There was STC India. There you go. STC India. These are all public sector names, and they all sort of came through very, very strongly in today's session on your screen. You also had sort of HBL Power, which went up 10%. They make that sort of coverage product in terms of railway safety. HCC was up sharply. Borosil Renewables, PG Electroplast, and so many others. Well, I think it's a wrap on this edition of Closing Bell from all of us here. It's goodbye. Thanks very much for watching. Our markets forward will pick up on the action in just a bit.